Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan is, I think, wrapping up our market outlook overview, which will go out in a little while. It is Sunday, May 21st, 2023. It's a little bit past, I guess, 11:15-ish, I think, it's here on the East Coast AM, of course. So let's get rolling on things, and then I'll shortly switch things around, and then we'll get going on the little bit of a browser run and then a look at the charts, kind of a combo of both. Here's our trusty disclaimer, if you could please memorize that. And then we've got the intellectual property rights notice here. Please take a look at that for us. Thank you very much. And then we've got this week's planned program stream. Leave that up there in case anybody just wants to take a screenshot or something like that to follow along. I'm going to keep this so I can stay on track and keep it on a separate screen that we're not recording on, and then we'll go from there. So let's see. Let me just stop the share for a moment, and I'll reposition this PowerPoint so it's not in our way, I think. And then we'll be able to start to proceed here. I've got some tabs I want to get open here. Where's that at? Well, you know what? Let's start out with sharing the screen so we don't have just a goose egg there. Share that. And then I've got to find the, what do we have here? I don't think it's this one, or is it that one? Oh, no, it is this one. Good. So I got it for a change. I got it right. So we're going to come back to that. We'll come back to this as well. This is just the big market caps. We're just really mainly talking about the year, which I'll get into. So what I'll do here, I'll leave this up for now in case anyone wants to look at it. I'll cover this a little bit later, but I'm just going to do the review and summary, and then we'll get back to, let me put this in a better place actually, and then we'll get back to it. So let's get into SPY real quick, and then we'll hit the browser tabs, and then we'll come back to the charts again. But this, we talked about this last weekend, and we talked about how so here's Friday of this past week, Thursday, Wednesday, Tuesday, Monday, and then here's the Friday, right, on the SPY prior. And we noticed that things were looking pretty rough there, but they were able to bring it back at least halfway, roughly speaking, in terms of that candle. And then they went ahead and they got that 20, they kept it above or at least near that 20 SMA there in light blue. And, you know, that was a big deal, as silly as it sounds, but we've seen a lot of those. We've noted that, I think, too. We've seen a lot of those Friday saves, as I've been calling them, help to keep things intact so they can then try to get a rally going following those Friday saves, or at least keep these technicals intact where things aren't falling too dramatically. So that's the Friday save on the 12th. And so the 4th and 5th are right there. And so that was a Thursday save that was punctuated by an even more impressive jam up on a Friday. But this is, excuse me, this is just what they've been doing. And I think this is another one there, maybe on a Thursday and Friday, they moved it up and kept it going. So you get the idea. And that's what we noted last week. I think we also noted that, you know, that we're going to talk about that. What we're getting at is it keeps that third year of the presidential cycle intact, right? That this should be a sweet spot for it. We should be seeing good performance really for the next few months, not the typical sell in May, go away. But, you know, we can only take that so far. I think these analogs and these cyclical things are helpful. Seasonality is helpful, but so maybe you're a little more tipped off than you would be. But I think in the end, you've got to still trade what's in front of you, obviously. And you can only go so far with banking on an analog to trace out very closely to where you believe it should. But the narrow ranges were at least broken this week. This is really just a review and summary. And that's welcome, right? We had, I was telling folks that we're having a lot of frustration build during this, right? If you're actually coming out ahead with singles and doubles during that let's call it that rectangular consolidation, I think you're doing a really good job, because most people get frustrated during these times and they lose instead of getting frustrated and kind of eke out wins or eke out singles. So that when you do finally get a nice burst like we got here and we got this one here, that you can do pretty well comparatively. And that's what we got this week. So I was happy to see that, because it really has been, well, Citi has it as one of the most painful consolidations since I think the early 80s, in a note that I came across on Twitter. We did say that we thought that the mega caps, they rotate to potentially to other mega caps to start to move things up or keep the fun going. And that turned out to be something that was worth keeping an eye on, because they really did go to Amazon and Google, and they went to Nvidia, and they jammed that up there. And then, of course, the SMH was big. We had that as the UOA. No, I'm sorry. That was the Rebel Pit Pro. We made that as the selection of the week. We talked about that a little bit on Cocktail Hour. So you couldn't ask for much more, because it was really cheap to play the SMH. And when you can get into an option for $1 and change and then have a nice, I don't know, $8 move, I think it was, from where the trigger was, roughly speaking, to the highs, that's something you'll take every time. That's a lot of opportunity on the cheap. But they did bring Meta, Apple, and Microsoft up towards the end of the week, and clearly, right, enjoyed what could be a breakout. So while we're here, let's not fail to mention that, at this point, what we'd probably expect would be, now that some things got short-term overbought, and I would say, the Qs became short-term overbought, SMH short-term overbought, some of the big names short-term overbought, you may get a nice little pullback. And then if this thing holds, here, or even if they dip it back into the range and then manage to bring it back up, that would sort of be a test, right, to try to convert what was formerly resistance into support. And that's always something you always have to be on guard for, that it could be a false breakout. It could be a legitimate breakout. And there's nothing that says that they have to back this up as well. They could just keep going. As of right now, if they were to extend this from the kind of this incoming leg, and then effectively factor in the retracement magnitude, or I should say height, and then extend that out, that tells me this could still run dramatically higher. And so I won't rule anything out. I'm just going to try to be nimble, and I think not getting locked in, knowing that there's a lot of scenarios that can play out. You really keep yourself psychologically nimble, which is probably the first step, right? You want to be able to be that way. And when things are going for, and you can see that it's strong, then you can maybe be a little less of a tight grip on that steering wheel. But when you get into where we may be now with this potential pullback, potential advance, all I would say is that I wouldn't like to add certain things right out of the gate when they're this overbought in certain places, which we'll talk about here in macro measure a little bit, and we'll talk about that in sector situation. But I think that the rankings that we had were pretty on target, actually. Like the Qs, for example, we had those as the strongest, followed by the SPYs, followed by, I think, diamonds, then IWM. And IWM and the diamonds did not do all that much, but SPYs and QQQ did have their day, right? They had really solid performance overall on the week from the weekly lows, and they ran. So keeping an eye, I think, on what's working and what's not working helped us out, right? I think we had that, at least that part of it, in line. I think the semis took their second chance and ran with it, right? So we were looking for the semis to maybe do something a few weeks back, and then last week, and they finally did. When we noted that, we actually covered these, I think, in here, I think, and sector situation. But we had these lines in place of it could start showing us something and maybe go, because remember, one of our things was we thought it was lagging far behind, and what they would probably need to do to get this market to take that next step was to get the semis rocking and rolling, and they did. Luckily, Ryan and I always discuss the trades of the week and the bonus names, and we usually put 4 out in the Rebel Pit Pro, because we have a main name, of course, but then we've got a few what we call bonus names, just because, right, you just do not know what kind of news could affect your stock, or if it's ready, your favorite stock, let's say, or if it's ready to go at that particular moment. You could think it is, and there can be a lot of work you can do to say this thing's really primed. But right, all it really takes is some story somewhere to keep it tamped down for a while. Then half the week's gone, and there's not a lot of opportunity at that point. You've only got a few days left. So considering that we're trying to just do short-term swing trading in that service, so we do include other names, but we did include NXPI, which was also a nice mover, I think, in that one. So it's good when the reason we do that, though, is so that, yeah, it had a nice week. The reason we do that is just because it's kind of like, right, you don't want all your eggs in that one basket. It just gets back to that, where if you stick with just one thing, you can really hamstring yourself, because, again, there can be certain developments that just keep things tamped down or inactive for a while, and we only have a 4-day window to really trade it. So, in a little shy of 4 days, really. So yeah, we were fortunate that the main focus name, and I think a few of the bonus names, NXPI and maybe the other ones, did fairly well. I don't recall exactly off the top of my head at the moment, but at least NXPI and SMH went. Now, I do think at this point that with Nvidia, this is a major mega cap at this point, right? And you can see the earnings are looming. We talked about this before, that maybe this would be a positive driver. So it really didn't run crazy. I do think it's short-term overbought. A lot of my intraday charts are telling me that it's short-term overbought. So it doesn't mean it can't get, of course, further overbought. Anybody that's got a little bit of experience, that believes in trend lines and kind of the way that stocks seem to set out on a certain path, and then they level off, and then they kind of accelerate into the final touch of a trend line, like I just drew right there. This would probably be the time to do that. And so I wouldn't rule anything out, right? Because look, the technical profile is really hard to argue with right now. You've got, even if you want to do it on a simple basis, highs, lows, the kind of dramatic run this thing's had. Remember, this was a little bit over 100 only in October, mid-October, and here we are. I guess it's 7 months later. This thing could be in the high 300s with if it puts together a great week this week. It's just utterly remarkable. We know that the AI story is driving this, at least apparently it's driving it. But look, on a simple basis, all of your SMAs are upsloping, and they're all stacked essentially, right? One above the other, above the other, above the other in terms of duration. So it doesn't get much better than this, other than the fact, and I do think, like, my cyclical stuff that I like to look at also says that it's looking really good. It's hard to say that it's not. I don't know on what, like, I don't know. I really don't know on what basis that you could say it's not looking good in the short run. I'm not talking about bigger patterns and things like that. I'm talking just in the short run, which you could look at, and I would look at, all as much as I can that I feel is pertinent. But just for our purposes here, I think this looks good, other than it's short-term overbought. I think the ideal scenario for this stock would be to tread water on Monday, maybe Tuesday morning, and then try to launch into earnings, get a good earnings report that the gang thinks they can work with, and then maybe they try to mark it up, and that would really lift probably a lot of things that would trade along with that. Probably not to the same extent or degree, of course, but anyway, that is one thing we kind of latched onto a few weeks ago and said maybe they're going to use the Nvidia for a catalyst. Maybe they are, maybe they already have. Maybe they've been doing that. So some of our guesses, I think, have been okay. Let's put it that way. But still, and I'll talk about this in sector situation, I'll just flash it right now. This has really been concentrated in your tech and your communications, XLC. So it's not this across the board thing. So that leaves me with relatively narrow participation. That's been a big story. I think that this AI hype is not dying off. It should still be the focus of this week, especially if it's bullish, and the company comes out and says we have unprecedented demand, and blah 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 for what we're doing here, and could be your exclamation point, your crescendo for this latest round of super hype. So we'll see. I mean, it's always interesting. The market's always interesting. So the current assessment is, and this is probably where we need to go back to the browser window, which should be the last one down here. And it is. So let me get that. And just remember, let me just jump around a little bit here. Remember, just a reminder, right? We talk about this almost every week, but most bear market bottoms occur in October by far, with March being, I would say, a distant second. Okay, so just so you know, which is when we bottomed. And then you can also note, right, that you've got this third year, right, that we're in right now, the presidential cycle. And that is nearly double as good as the next best year, which is next year. Okay, which you can understand why some people are positioning that way, because a lot of people, believe it or not, just will follow these things and figure that everything gets sorted out in the end. And here's the other piece we added to that about a month or two ago with this kind of nicer graphic that tells you how this green sweet spot, right, that plays into this pre-election year, how that runs really until just about mid-year, and then kind of struggles, but then in the end, they all cases, right, rally in terms of whatever you're looking at, Dow, S&P, NASDAQ. And we're in the sweet spot, and I think they've maintained that sweet spot, right? We have to, as much as it bothers me that it's kind of bogus in a way, I think that save on Friday well, just another bogus Friday save. But hey, this is what I've watched these guys do this my whole career, so it's not as if it's anything new. It just, it's just clear what happens to me, and it just sort of like, okay, here we go. We know it's also a reminder of who's in control of this market, and it's certainly not us, right? So, but anyway, that's where we think we may be, right? So we're tracking along, thinking this is where we may be. This is for folks that are maybe a little bit newer. So the third year's been preserved to this point. The market did, obviously, it's hard to say the market did not take a turn. I mean, did take a turn for the better right now. But right, you're kind of getting there on a greedy basis, not extreme by any means, right? And here's your, oops, timeline is right there. You can get higher. We have been higher before this becomes, let's say extreme, right? So we know that. So again, this is why it's not as easy probably now to be a bull. You've had some short-term overboughtness that's there. And your key sectors are not flashing great stuff at the moment. I'll cover that in sector situation. But then these new reports on various things have also been concerning. However, the concern has been, I guess, maybe helpful or instrumental, we might say, in terms of helping this market rally from a contrarian perspective, because this is the 14th consecutive week where the AAI survey has below average optimism. And so we've been making the case, and again, it's not something that I really, I don't know how to even put that. It's not something for me that I really think is, I guess cynically, right? You have to look at this. Let's put it that way. Cynically, you have to look at this because you have to be really cynical, I think, when you're operating in the market in the short run. And these guys are great at taking the obvious and using it against people. And there's another way to put it. And so they've got a lot of people that hate this market, a lot of people that think that this is nonsensical what's happening here. They see how narrow it is. They see that these big names are pulling everything up really in the indexes in terms of the index performance, that most stocks are not participating. They see all this, and all that really does is frustrate people. And that's what they love to do, frustrating people, so, and they do it. And then what happens is, of course, people eventually capitulate on the wrong side. And after things have been marked up extraordinarily, some may say, then you've got a bunch of people piling. And that's why I'm not ruling out that sleeper scenario that we talked about this year. And the sleeper scenario is, let me go back. My chart should be here. The sleeper scenario, which we use the SPY for, come on, I thought I got rid of that N there. The sleeper scenario is that we get out in the face of everything, they bust out of here and they take out this area here, which is about 432 to round it off near the top. And then there could be, I still would allow for a 1 to 2% burst beyond that, because there will be, I think, some people that capitulate there in terms of short squeezing, and maybe there'll be some positive news that accompanies that, right? And remember, things the market's ignored for the longest time can be especially used positively. For example, if there's some sort of a Russia-Ukraine, I guess, cessation, then they'll use that, right? If there's like, we're going to stop this war, we're going to get a peace treaty worked out, that will be used to further squeeze people, even though a lot of people would say it almost doesn't matter to the U.S. equities, right? In a way, it could be negative, in fact, right, because of this boondoggle for the arms manufacturers and defense program players. But regardless, that's what they'll do, in my opinion. And so I would allow for that also. So I wouldn't even rule out that you go even further. I'm thinking maybe 1 or 2% further. Maybe it's more. That's if it even happens. But that's been my sleeper scenario, because I think this is my argument is I think this is where a lot of people would say, well, that's not the first high that it took out. In terms of the downtrend, this was the first high in this area that it got taken out here. Now they're making higher highs on this intermediate term trends. And now this is an even second high that's taken out. And people that I think trade longer term, I shouldn't say trade, probably have an investment perspective that has a strong technical component, probably would look at something like that and say, yeah, well, this is a second high getting taken out here. This is no joke. And I think it normally isn't when you're trading stocks. I think that's a good thing to look to. But I think it's it could be part of the fake out maneuvers that we get treated to. So let's come back to this by doing this right here. There we go. So remember, there's a lot going on. This is one reason why this market is so hated, right? Because people are wondering how in the world you can continue to rally as you are. And this is, a lot of it's due to this AI, of course. And I just, my whole thing is that that's been the happy talk, right? That's been why a lot of the narrow leadership's been disregarded, explained away, and that this is supposed to be this incredible boon. Now, some people have made the case that that's been argued for the last quarter century, and that's true. It has. I remember reading stuff back in the 90s about this. So maybe, right, it's the next step. Maybe they really have cracked the code, so to speak, and there's really a lot more that's going to be delivered. And I wouldn't doubt that. I certainly don't know enough about it to even say. It's just that I've seen them spin this before, and there's always this hype and super promising stuff that gets bandied about, and then the follow through has never really been all that impressive. But maybe this is the time that it will be. But regardless, it's still, I don't know if the AI saves you from economic realities that fast. Maybe I'm wrong. My argument also is, if AI is going to eliminate all these, let's say, good jobs that are out there, right, that it's relatively, some of them sophisticated, even just solid jobs that people have, I don't see how that, like, the consumer getting further battered is a good thing. But that's me. Also, right, I think the consumer is not really firing well. I think people are going into more and more debt, not because they're so optimistic like some people have been claiming. It's because they're needing to. That's my take on it. I just don't buy the hype that people are spending this way, because maybe I'm wrong, but I'm just saying I don't buy that. I think people are not in a great position right now, and they've been put through the ringer the last 4 years or so with different things that have hit them. And so, yeah, I'm not buying that. I think that people are here because for the same or similar reasons that they were kind of here, right? Where it was a rough stretch, and people needed to tap credit more and more. Now, here's probably a decent summary of what's going on, right? Where you've got fundamentals deteriorating. You've got most of the, as we showed last week on with a different commentator, not Tavi Costa, someone, I think it might have been Lance Roberts, where the way that he looks at the yield treasury curves, they were 100% inverted. Soft data is mostly at recessionary levels. Macro data starting to contract. Banks severely reducing their lending standards. I'm not sure about that one. I think I could be dead wrong, but I've seen conflicting things on that, so I don't really want to say much about that one. But this is also the case where money supply is really contracting, and of course, there's been massive withdrawals going on due to the banking crisis. So that's the quick take on most of the stuff in terms of the current assessment. I think that there has been stagflation. The talk is rising. And I don't think, to kind of cover that bullet point, I don't think that the Fed is set to ease as soon as expected, which is why I put ASAE in there. I just don't think they're going to start easing at this June meeting unless there's something dramatic that happens between now and then. That's just my gut instinct from what I've been reading, from some of the stuff in the speeches that we've seen. Again, I'm not an expert on that, so take it for what it's worth. But bottom line, I've been disrespecting the debt ceiling. So if you wonder, well, why hasn't Wayne discussed this debt ceiling? That's probably because I am almost like, and I hate to not to sound like I'm some kind of expert on that, but I'm just kind of immune to it. I've been through it so many times, and I think anyone that's paid attention, you don't even have to be a trader, but if you've paid attention to this debt ceiling stuff, it's almost the same thing every time. It's as predictable as formulaic Hollywood movies, which is pretty much 90% of what they put out, if not more these days. But it's the same thing, right? There's all this jawboning that goes back and forth, and eventually, it gets worked out, and there's this big celebration that they've done this, that we're supposed to be happy that these people are going to further in debt, each and every taxpayer. But regardless of that, I'm not saying you never know. There's could be a time where things get shut down, and I personally would welcome that. Less harm will occur in our country if they are shut down. But on a side, that's just a side note. But yeah, I mean, if it happens, it'll probably be taken poorly, so I wouldn't completely rule it out. But my probabilities of just from history are that it'll be a lot of yakking and counter yakking, and then you'll get through it. It always seems to play. I should say, mostly seems to play out that way. So look, there's buybacks going on. They've really ramped up again by companies. Now that they've got their stocks back to some of the highest levels that they've been at for a while, they're going to start buying them back in a big way. That's always makes sense, right? But what that does is it allows you to mask the fact that your revenues and things like that really aren't growing the way they once were, and you can improve your bottom line by reducing the number of shares for EPS, and that's the game that gets played. And to make matters worse, at times I've seen where they've got buybacks in place. It's very cynical. It's self-serving. And meanwhile, insiders are selling to the buyback program. Yeah, I've seen that. So it's just ridiculous, but that's what our country's become. Wall Street's certainly a leader in ridiculousness too. But anyway, the sentiment's awful. We've seen this massive gamma squeeze, which is down here, and I'll show that one. Oops, right there. Biggest gamma squeeze in 9 years, right? So you've got the awful sentiment. You've got a lot of people still underinvested. And then you've got this Google UOA example that I said I would cover. And this is really something I don't do that often, but I'm not a big fan of counter trend trading. I especially hate to go against stocks that are really strong. And the Google has been really strong, but I'm thinking, and I'm just kind of going to just share this, I'm thinking that maybe Google just got a little bit too strong. So what I'm going to do is set my Bollinger Bands to 3 standard deviations. And it would be helpful, right, if I clicked on the right studies to do that with. But there's my Bollinger Bands. Let me get the positive. Oh, number of deviations up. Okay, that is already there. I didn't realize I didn't reset it. I thought I reset it. I'll switch over to Google, and I'll just use Goog because that's what the idea is based on. And you can see that now these bands are fairly wide. They're not the widest they've maybe ever been. I don't even want to go into that, but you can see the Bollinger Bands are not narrow. So that's a difference maker to me. I don't really use Bollinger Bands that often for anything other than to just note when there's a time like this, when it's extreme. So mine are set differently than I think a lot of people set them. I set mine on a 100 period average, moving average. And I think, I was doing that just because I didn't want to, I don't like noisy indicators. I like indicators that when they say something, they tend to not be noisy. They tend to be more it's worth checking out because it's not noisy and not that you get called away to check something out all the time. But this is really, this got 3 standard deviations away from this dashed 100 period moving average from the mean, essentially. So this thing stretched that far now, and the slope of the ascension, I have it on another system that I use, and that came out to about 83 degrees on my normal chart view, my normal kind of window through which I like to look at stocks. Which a consistent window, I think, is really important. On a side note, for people that are newer, that you get used to looking at a certain amount of time and so on and so forth, because that way you can really differentiate things, because the scaling, right, and different things can really change your perspective. So you've got to pick what you like. Maybe every now and then you change it for a different perspective, but I like to look at something consistently that I think can help me when that does that consistent scaling, that consistent amount of time helps me. But this is an 83-degree slope. So this is why I'm sort of picking a fight with it. It got short-term overbought. Google this is on my, let's see, daily chart. I've got the RSI checking in, I think at 77 or 78 still, and that's after backing off. That's why I kind of, when I saw this paper come in, that's why I put the idea in. And so I keep these on a very short leash. I would keep a counter trend trade like this on a very short leash. You might say, well, you might love the idea for all I know, and there's a gap that it can fill. There's all kind. I get all that, but if these guys, if you overstay your welcome, and if you get into this and you do not roll down aggressively, you're playing into their hands, because there's a lot of people out there that are going to see what we see, and they're going to give you a little taste of what you hope that is going to be a lot more of, right, which would be downside. And they could, not saying they will, but then if they start to not give more and start reversing this back up, they're going to have drawn in a lot of fresh new sellers like us. We're part of that. So that's why if this thing doesn't break down and you start seeing it turn around, you're better off taking your small profit, and in my opinion, and then living the trade another day, because you can always get back in. You don't have to wring every last red cent out of it now, especially if it's not willing to give it to you. So just keep that in mind, especially if you're newer. I harp on stuff like this in all of our services because I've been wrong about everything so many times, especially early in my career before I learned a lot, just from getting my butt chapped. So there you go. That would be my advice. Now, the other piece of advice would be roll down quickly. Another piece of advice would be, at the very least, get in a quick trim. What I mean by a quick trim is if you get a nice little drop, let's say you own 10 puts, maybe sell 1 or 2, right? That way, if they start playing games with you, you still have a profit locked in, and you know that even if it gets back to where it triggered for you, that you can just get out of those 8 and still keep a profit. And that's very psychologically reassuring and calming when you're in something that can be really irrational, right? Or super hypey. And remember, this is super hypey, and you've got the Nvidia thing coming up. So if they follow that Nvidia path where they maybe chill for a day and then start jamming, and then AI names catch on fire, of course, Google being one of them, right? You could be in trouble. So you've got to be smart. That's why I'm spending the time on this. If you're new, we talk about this stuff all the time, of course, in the services. I don't get to talk that much because I'm long-winded. It's probably better that I don't talk, but The reason why I don't get to talk really is because we're so busy, and Ryan probably covers things more quickly than I would. But anyway, this is what we're trying to look at here. You can see that slope is, it's hard to see on that graphic, unfortunately, but this is one I think that's worth a look because the market is short-term overbought, right? That's the bottom line. This is even on my, I think my 4-hour charts, this thing's still near 79. So that's just an extreme ramp. And again, the Bollinger Bands are fairly wide. Maybe not the widest they've been, maybe back in here somewhere. They're the widest they've been, maybe back in here, but it's still, they're still pretty darn wide right now. They're not narrow, which again is something I would take into consideration. So that was just a little diversion there into, if you think you're short-term overbought, here's a little something maybe we could do about it. There was some really large UOA that hit. I think my gut instincts tell me it was more of a hedge. We'll see. You know, you just, these counter trend ones, you've got to be careful. So the bottom line is stock market continues to ignore these conditions. The Qs, as I said, the QQQ, the SMH, those are definitely still overbought. The Qs, for example, on daily, even after that little backup there, they're still at over 70 on the RSI. Right, and they still have room, so we don't want to get crazy here. But it's just that you can't rule out a little bit of, hey, back up maybe a little bit, and then find support above or near the breakout level. And then if they do that and start to go again, they might be able to extend this for another leg. Right, that would be my probably most favored scenario right now, just because of the way they ended up being so overbought. I think on the 4-hour charts, for example, they're somewhere near 74. I don't want to go through all this because we're already taking a lot of time, but SMH is probably in the same camp. I think it just backed off a little. It didn't probably run as much in percentage terms, but or maybe it did, but it visually doesn't look as bad to me as the Qs do, and it's finished right near 69 on this one down here, right? If you look at that. So yeah, those are there. So I think that would make sense. A little bit of back off at some point, maybe Monday or Tuesday, and then maybe they get gear things up for the Nvidia, and we'll see what they can do with that. This is interesting, right? They got a hold of everything. That's the other thing, is that everything did rally. Even IWM and diamonds rallied. It's just that they were not really as good of performers as the other few, especially the Qs. But certainly spiders and Qs were better than those. That's, again, goes back to our rankings. So that generally played out. But what they put together was pretty impressive nonetheless. Again, they did stall out pretty big on Friday. So IWM, this is the test of, we said 50, we said trend line. Let's see what happens, right? It should, if they're going to try to work with this thing, should be able to hold it near these SMAs and the support line there. And if they can, and then get it going again, I would give it its due, and think that maybe if they could take out this high, they at least try to get up here to the 200. That would be my gut instinct. Now, remember though, there's definitely resistance. We could put a resistance line about near 180-ish on that. So there's a lot of resistance waiting for it. So that would, the real, like the game is back in town for IWM. This is a starting point, right, that we talked about. But now I think you've got to see if it can get above the 200 and hold the 200. So that would be that one. Diamonds will cover. And I'm probably going to skip things like the VIX and dollar yields. Dollar and yields moved up, but it didn't affect the market whatsoever, which, again, is somewhat curious. VIX didn't end near 15, but remember, got the Memorial Day holiday. So if the gang is able to really put a strong week together, the VIX could get bludgeoned. If, right? It's all ifs, but the VIX could really get bludgeoned with a 3-day weekend. People might start slamming volatility, late Wednesday, Thursday, if they think we're all in the midst of a good week. You could see things really tail off by the end Friday. Diamonds, right? That looks a little bit better, but it struggled right there to get through and hold the 20 in light blue, and then drop back to the 100 right here. So we kind of know that that's this high right here on Thursday is what that needs to get through to possibly go again. But if you look at the pattern, right, nice strong move higher, corrective phase here, held on to probably right 2/3 of its gains, roughly speaking, from the low to the highs. And now, right, this is its chance to go. If the market goes, this is probably the chance. And then it would need to come back and attack the 340, let's call it 341-ish level in the diamonds. So that would be probably up, what, about 2% from here. So if they have a good week, they're still not really busting through. It would be a nice week, of course, but it would be still have some technical questions about it. SPY, we already talked about that one, but I think SPY and Q are pretty similar, where the Qs, I think, right, I would say the most likely scenario is that this little selling, maybe, again, we don't know what the weekend, over the weekend news will be, or Asia news yet, but I would think there's a little bit more back off maybe. And then if they can support it, then maybe they try to go for more from there. That would be the smart move, I think, for bulls, is to back it off a little bit and then hold it and then reverse it higher, especially the Qs, because of how extended they became. That would be my way of looking at it. For all I know, though, there's going to be breaking news that they take this, just keep going. But I do think, right, that the most likely scenario still is smart back off if I'm them, let the thing dawdle for maybe a day and a half, and then you try to end the week. And remember, they do like to close out holiday weeks on a high note. And you have these big American holidays, weekends. This is what the tendency is. And at least I can share that anecdotally from my career. I feel pretty confident saying that, but I don't want to, I might have, like, memory bias or whatnot on that. But I do think that's the case. I don't know. I've ever seen data on that. I think a lot of people say the same thing I say on it, but I'm not so sure I've ever seen stats on it. But remember, every situation is unique. But if they have the chance, I think that's what they'll try to do. But I think this little bit more of a view here sort of tells you that they took out that high that we're talking about here, right? That secondary kind of high to prove that, hey, we're really in a bull market. And we very well may be, even though I still doubt it. And my sleeper scenario is that they do this, but they do it in the S&P 500, right? So I'll just go back to that. I've been talking about that for a while. I don't want to act as though, like, I don't have anything, an imagination to come up with anything new, but it's just something I've noticed over the years that they seem like they tend to do. And then that gets, once everyone that's finally capitulates, I shouldn't say everyone, but so many finally capitulate, then they finally let reality start creeping in about what's really happening in the economy. So, and remember, when the Fed starts to cut, historically, that's been the time when the market has not done well, because that's the realization that the Fed feels it's necessary to cut because the economy's on the path of deterioration at that point too much, and the Fed's considered to always be late. So I think to sum up, to kind of conclude things, I think you have to stick with your short-term trading right now. I think you just I saw some good comments in Rebel Pit this week from guys that have been to our live events. It was very, very encouraging to see, because, we try to share these big macro takes and big picture things so that folks have respect for risk and what could come down the pike. We've always done it this way, but at the same time, you have to trade, and we've always tried to trade in the real time, right? Trade that market that's in front of you. And I saw someone note that they, initials AS, that they really kind of took all this to heart starting last summer. They got through some rough times last summer because they had a kind of a negative macro outlook. They got away from that gradually, and they've been just focusing on trading in the here and now with the short-term developments, and that's really worked out well for them, which I'm really happy to see. That to me is a great story, and what we're trying to really get folks to help out with when they come to Market Rebellion. We try to get them to that point where you just got to trade that market in front of you right now. But don't sleep on the building risks that are out there. Be apprised of them. Just don't let them in the short term, right, inhibit you or cause you to miss out on great rally opportunities. Because trust me, I'm in that camp with a lot of these folks. I do think that this is fantasy land material that the bulls are trying to push, but I'm not going to fight against them while they are carrying, right, the battle. They're the ones that are carrying the day, and I'm not going to fight against that, because that's just a great way to lose a lot of money. And you've just got to go with this trend, even if you find it distasteful, I guess would be one way to put it. I still think, I don't know what new bullish drivers are going to come out that would really turn this into this big, big boondoggle for bulls. Maybe there will be something. Maybe it is the AI, and I'm just too cynical and don't know enough about it. I'm not, but I just don't know what are your bullish drivers. It could just be, right, this third year keeps chugging along in the presidential cycle. And they manage just to keep going. And I've seen them do that, and even without drivers. But usually there's something they're citing. Maybe what they'll start citing is the market's performance, right, where you get that sort of referential circle. Well, look, the market's doing great, so I'm buying, and I'm bullish because the market's doing great. And, that kind of thing that they get going. And you're like, well, what's your real reason for it? How does any of this make sense in light of, it makes sense in light of rates, in light of where the economic data is, in light of the consumer, in light of inflation? How does any of this really make any sense? And they'll just say, well, look, stocks are sniffing out that we're going, that'll be the answer. Stocks are sniffing in the lack of a driver or drivers environment. It will be, well, stocks are sniffing something out. And let's look at the performance in the third year, and let's look at the fourth year of the presidential cycle performance, all that kind of thing. And they'll throw anything against the wall. And as I've always said, the financial media will only be too happy to take that and report with it. They'll act as though they're real hard-hitting reporters with the public, with the public's best interest in mind. But this is just my take. But then in reality, it's just all the world's a stage, and these guys tend to be promote the hype and ask questions later, if you ask me. But that's the market's lack of concern. I've seen this many times in my career. And what it's really, there's this real divergence between, real problems and the market prices. The real problems have won out every time. So if things don't get better and the market keeps going higher, then I think this can only run so far. But you've got to wait, right? You've got to trade it as a bull until, this is why this is not easy. You've got to trade it as a bull until that point if you want to do well, right? And that's, maybe that point comes up soon, but it just, until it does, right? You've got to still look at the action, evaluate it objectively, in my opinion. These are all my opinions, not as if it's gospel, but you just take what they're giving you, you work with it as best you can, and just do the same thing the next day, the next week, the next month. That's all you can do anyway, unless you're going to go trade some other market, and I think this market is the best market to trade because we have tremendous liquidity in our market versus a lot of markets. We have options on, stocks that companies that shouldn't even exist. So you've got options you can use, and that's an amazing advantage, right? So this is the best market. I mean, I think you ask anyone in Australia or Europe, and I think, other than maybe if they're familiar with how their market trades, they probably would say, well, I wish I could trade in the US market because it's very robust compared to other markets. And there's a lot of liquidity in the US market. And then, of course, the options that are on so many stocks are just, that's such an advantage for all of us that really like options and have experience with them. But yeah, I think that's what we have to do. We're going to stick with the short term, as we have no other choice anyway. Stick with the short term, just trade what's in front of us, go with the flow, whatever's there, do it wisely, right? Remember, just always put things into context, right? If you're out there and saying, well, I really love Microsoft as a company, I really want to go long Microsoft, excuse me, as a company. I think Microsoft's going to do really well as a company. That's true, probably, I guess, right? Let's say you're right about that. But do you really want to position yourself here for the long haul in the biggest way possible? Or right? Could you buy some of what you want or use calls instead that have built-in protection, right? Do you really want to buy, do you really want to start initiating things when the weekly RSI is above 70, the daily RSI is above 70, the 4-hour RSI is above 70? Is that when you really, and there's a gap here, right? Is that when you really want to, and there's this debt ceiling thing, which I'm dismissing for the most part, but you just never know, right? There could be an issue. So that's what I would say. Just if you put things in context, is should we be salivating over Google? Well, oh, I can't wait to short that. Well, maybe there's an opportunity there. We won't know until it plays out one way or the other. But you can't pound the table on something like this. I didn't like the candle, by the way, that was developing that day. But you can't pound the table on this as if it's a lock, right? You have to treat it and respect it for what it is. You're going up against a very strong stock during a hype phase, and you've got to really cut and run if it's not working, more so than when you need to cut and run when something else is not working, right? Even like another good idea, you still need to cut and run. But when you are going against this kind of a strong trend and the hype is being, bought up at a faster pace than hotcakes, that's when you may have an opportunity. And we have had times in the past where you've gotten these big jam jobs, right? And then there's, after the jam job, the stock comes off very quickly. And that's what I'm thinking that could happen right after the run. But remember that this run, even though it's statistically blah, 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 we think it has a chance at least to really give some back. I do, or I wouldn't have put the idea in, but you have to do it within the context. Look, remember, you don't have to win on every trade. And even if you just eke out a small winner and then get ready, set an alert, get ready to trade it again, your time may come. But by being smart and being disciplined, you can keep extending your opportunities that are, just think of those, right, as fishing expeditions or gold mining. Think of it like that, where, right, you're not, every single time you throw your line into the water, you're not going to catch the big fish. Every time you go to mine and you get your pickaxe out, and every time you knock away, right, some dirt, you're not going to have this big massive nugget. But if you keep going back at it, right, it'll and it doesn't, you're not hurt that much, it just costs you some time, then if not money in a big way, then you'll eventually catch something, or you'll eventually find a nugget. And that's how you have to think about it, in my opinion, if you're new to this stuff, because it's not about being right that one time. It's about having a consistent and smart process that you execute with, and you put it all within the context of what you're doing. And then you just do that over and over and over again. And eventually, if you do it smartly, because you are disciplined, you will maybe have a little bit on the commission side, but eventually, right, you're going to catch that nice big whoosh at some point, just to use this as an example. And when you get that, that's going to, right, more than pay for a couple of trades that effectively were duds. So on that note, I think I'm going to wrap. I hope you got something out of what I shared with you this week. Maybe it'll help you this week, or to help you in the future. Wanted to just diverge a little bit to kind of talk about some other things, because I do think it's been, until this week, there has been some tough trading there. So we've got to just stick and move as best we can, be nimble. Just want to send some words of encouragement, because people are able to do that. So on that note, we're going to stop recording, and I wish everyone a great week. Thanks for tuning in.